Do you want your business to pay zero taxes or little taxes or not overpay taxes, just like Jeff Bezos does with Amazon? Of course you do, and you're going to be able to do that with what we call a tax write-off. A tax write-off is a legitimate expense that can be claimed as a deduction to lower your taxable income. A tax write-off is also referred to as a tax deduction. While often people think of a business expense when thinking about tax write-offs, they can also be tax deductions or tax credits are expenses that you are eligible to claim on your personal individual taxes. We also reduce your personal taxable income. When you have your own self-employed business, a tax write-off related to your business is an expense directly related to conducting your business. The IRS is responsible for administering the collection of taxes. And when you file your tax return, the IRS uses your reported income minus your tax deductions and credits to determine what you're gonna pay in tax and what tax bracket you're going to be in. A tax bracket is applied to your income range. So allow me to give you an example. Let's say that you are making $60,000 a year. If you're taking a standard deduction that's $12,950, your taxable income is $47,050. The deduction will lower your reportable income, your income tax rate, and the tax you pay. So you might be thinking, what's the benefit of the tax write-off? The benefit is lower taxable income, lower money out of your pocket, ultimate more cash in your pocket, but ultimately paying less in taxable income and keeping more of your money to invest back in your business. Who can write off expenses on their tax return? Everyone can write off expenses on their tax return. Everybody, an individual, a self-employed person, a business owner, a corporation, everybody can get tax deductions. And this is how it works. Literally, individuals can claim write-offs in the form of a deduction and a credit. A deduction are things like exemptions, things like being able to write off your mortgage, write off your children. But tax credits are also equally as important. A common deduction on your federal income tax return is the standard deduction, which is a deduction that the IRS allows taxpayers based on their income and filing status. One of the other biggest benefits is taking a tax credit. Tax credits are literally a big deal because they are deduction from tax owed and are dollar for dollar reducing your tax. So let's say you owe $4,000 in tax and you have a $1,000 tax credit. That $1,000 tax credit is going to reduce your tax down to $3,000. There are a lot of tax credits that people need to be aware of. And some of the most common tax credits are the child tax credit, the earned income tax credit, the child and dependent care credit. And self-employed individuals, think about this. If you are set up in a business or a corporation that is structured properly, you even get more write-offs than if you're set up as a sole proprietorship or just a self-employed individual. That's what's really, really important. As a sole proprietorship, you may be also eligible for the 20% QBI deduction. You don't care about the name, just know there's a deduction that you can get when you have a flow-through entity. Small businesses can be classified as small businesses based on their revenue, their sales, their assets, and their annual gross or net profit, but the number of employees that they have also determine whether or not they're a small business. If you are considered a small business with employees, like a privately owned partnership or corporation or sole proprietorship with employees, you may be able to deduct business expenses related to your employees that are on payroll running your business. And it's so many tax credits for those employees as well. A simple way to reduce your income tax bill is to make sure you're claiming all the tax deductions for your small business. And as a business owner, it will be essential to keep good books and records for business income and expenses so you don't miss out on any tax write-offs and cost you extra money. Because you can believe Jeff Bezos, he is not missing out. He is taking all his deductions for his rent, his phone, his internet, his bank fees, his outside labor, his car. He's getting it all in.
God damn!
And that's exactly what I want for you. Corporations are allowed to deduct business expenses that the IRS defines that are ordinary and necessary to conducting their business. There are two types of business expenses: current expenses and expenses that need to be capitalized. Current expenses need to keep the corporation running, like the rent, like the lights, things of that nature. Those are current expenses. Capital expenditures are things that you need in your business, but they're going to be around for a long time. They're not consumables. That would be things like equipment, things like a car. And it's so important. A normal business deduction for all businesses is operating expenses, which the business relies on to operate day to day. Some of the other expenses that not be normal operating expenses could be tuition for your employees, health insurance for your employees, bonuses, maybe an overnight stay, different things like that. But tax deductions are well worth it. And if you want to know how much they're worth, it really depends on several factors surrounding the deduction or the credit. Many deductions and credits have limits that are prescribed by the tax code, but I don't want you to be held down by limits. In some situations, the amount you can write off may be limited by your gross income. For example, student loan deductions, those get phased out based on how much you make. But the key is to track all your deductions. Don't you become the person that's eliminating your deductions. You really just need to track them all, keep real good records so you can take them before a professional and they can literally tell you, you know what, 90% of this is going to get you a tax write-off. My goal for you is for you to make sure that you do not automatically start limiting deductions based on your thinking it's not a write-off. While everyone will not qualify for every tax write-off possible, here's a list of some common tax write-offs. The standard deduction. It's a deduction that is specifically based on dollar amount that reduces taxable income. Make a note of that. Mortgage interest. If you own a home, are you thinking about getting in a home because you're currently renting? Remember, the interest you pay is going to be a tax write-off up to a certain limitation on the mortgage amount, where currently the rent you pay is not tax deductible. How about that student loan interest? If you're making payments on a student loan, that interest is going to be tax deductible. And that's another one of the write-offs that people don't even think about. If you are one of those people that want to give, did you know that donations to 501c3s, nonprofits, are tax write-off?
Oh, really?
What if you had your own nonprofit and you donated to that? Would that be a tax write-off? Absolutely, it would be. And even if you don't itemize deductions, you take the standard deduction, you can still take up to $300 in charitable contributions, or $600 if you're married. What about those medical expenses? We all have them. You need to think about medical expenses as a tax write-off too. There's a limitation. They need to exceed 7.5% of your adjusted gross income, but they add up. And don't forget the mileage and the over-the-counter prescriptions. You should also think about your future and contribute to an IRA. An IRA is a tax write-off as well, as is a health savings account. A health savings account allows you to contribute tax-free to a health savings account so that all of your medical expenses up to a limit can become a tax write-off. I love tax write-offs. And when you are self-employed, you really get to dive deep into various types of tax write-off for business owners. Think about the home office deduction. Businesses use their cars, supplies, startup costs, trying to acquire a name. All of these things can be tax deduction. So if you want to lower your taxes like Jeff Bezos, I really want you to horn in on tax deductions because it's important for you and your business. I know that this has been a lot of great information. That's why I want you to literally use somebody like me to help you with your tax situation. I want you to subscribe to my channel so that you can get even more great videos like this and come back and re-watch this video so that you will not lose out on any of these great tax deductions. I cannot wait to see you on my next video.